Welcome to the Q1 2023 UK Policy Update from Chainalysis. I'm Jordan Wain, UK Policy Lead, and I'm here to go through what you need to know across regulation, enforcement, and legislation. Before we start, I want to acknowledge that this content is for informational purposes only, and it's not intended to provide legal, compliance, tax, financial, or investment advice. We encourage you to consult your own advisors in this regard, and we reiterate that Chainalysis is not responsible for any decision, action, or non-action made in light of this material. In regulatory news, in February, HM Treasury released their consultation which outlines how they think digital assets should be regulated in the UK. Essentially, they believe that digital assets and firms should be regulated in the same way as financial services firms. As current proposals stand, both UK and non-UK firms providing digital asset activities to UK consumers would be caught and need to be authorised and meet the same requirements as financial services firms. It's worth remembering that we are very early in the process, and what emerges at the end will likely look different to what has been proposed here. What's more, it will be some time before we should expect detailed legislation and more detailed rules and guidance. You have until April the 30th to submit feedback to the consultation, which we encourage you to do. Email your thoughts to cryptoasset.consultation@hmtreasury.gov.uk. In another regulatory update from HM Treasury, they announced that firms issuing promotions for crypto assets will need to meet the same requirements as financial services firms issuing financial services promotions. Any breaches would lead to the same penalties. This legislation will be laid before the end of 2023. In a key walkback in response to industry pressure, HM Treasury has determined that already AML-CFT authorised firms will be exempted from needing third-party approval for their promotions. In enforcement news, we are seeing increasing focus in the UK on tackling digital asset-related crime and illicit activity. The UK government is proposing to increase the funding available for police to support their efforts to be more technology-led on priority issues such as fraud and cybercrime. Meanwhile, economic crime legislation being debated in the UK Parliament will give more agencies access to a broader range of powers to investigate digital asset-related criminal cases and seize and recover them as part of investigations. We expect legislation could pass by July-August of 2023, at which point we could see an increasing number of enforcement actions and that digital asset firms will need to comply with specific orders from law enforcement. And lastly, in legislation news, we have the progress of stablecoin legislation and the recently released CBDC consultation. We expect that the Financial Services and Markets Bill, which contains specific details on stablecoins, will likely pass through the remaining stages of Parliament by July-August 2023. Giving powers to the FCA to create rules for stablecoins. We do not know the shape of these yet, but it will see them regulated in the same way that payment systems are. We expect further details as part of a consultation later this year. Separately, we've also seen a consultation exploring the potential for a UK CBDC. The road is long on this one, as senior bank officials have themselves admitted, and it could be some time before we see a progression from the current design phase, where the bank is looking at what a CBDC could look like, and whether it's indeed even needed, to a build phase. This is a lot of activity in a very short space of time to digest, but shows that there is real positive forward momentum from the government to not only share their thinking, but push on towards setting legislation and rules for digital assets in the UK. As always, the devil will be in the detail, which will emerge over the next few months and years.